Welcome back. Economic policy changes could be on tap as President-elect Donald Trump prepares to take the reins. Investors are watching for possible changes, certainly to the tax code, which was one of the central platforms of the Trump campaign. Former Trump campaign economic advisor Steve Moore had a little preview of what to expect. Watch.
You heard it first here on Fox Business News. I think you may see two bills. I think you may see a business tax cut where you could actually get, I believe, a lot of Democrats, especially if you link that with infrastructure spending. Then you might leave the second part, which is the broad-based tax reform, for another day.
Joining us right now to break it all down is the Wall Street Journal's chief economics correspondent, John Hilsenrath, and Recon Capital CIO Kevin Kelly in New York. Gentlemen, great to see you. So, John, how do you think the two tax bills will be different from each other? What are you expecting out of this?
Well, I mean, it sounds from what Stephen Moore says that like they want to split them up, but there's a lot of back and forth that they have to go through on Congress before that happens. The big question for me is, what do they do? We talked about this the other day about the border adjustment. This is a $1 trillion revenue raiser that the House wants to do, and it's really a linchpin to getting corporate tax rates down. The president-elect said the other day that he's reluctant to take on that proposal, so they have to hash out how they're going to do that. If they're going to get this business tax cut passed, they have to figure out what to do about the border adjustment.
Kevin Kelly, at this point, isn't this really a show-me market? We need to see real details pretty soon into this new administration, first 100 days, in order for people to feel confident that, in fact, we will see tax reform in some form, whether it's two bills or not.
Yeah, and that's what you're seeing take place in the marketplace right now. You're seeing the market's been relatively flat. The banks haven't done well on their earnings guidance. The market is a forward-looking indicator, and it's telling you everything you need to know. There's so much uncertainty around all these tax plans, policies, deregulation. I mean, we haven't even heard anything on repatriation of capital back here. That was supposed to be a big push. You're going to get all these companies to bring back all this money overseas and deploy it into the economy, and we haven't heard a word on that. Now we're at the forefront is the border tax adjustment. So I think the market is really in an uncertain show-me state right now, and no one thinks it's going to happen until the third quarter or fourth quarter, because right now you've got the Republicans solely focused on repealing and replacing Obamacare, which could hamper all the economic policies they want to do.
Yeah, I'm a lot more bullish. I think you are going to see a lot of these major tax reform items happen largely between now and August and the August recess. I'm hopeful. But, John, you've obviously covered the Treasury Department, and I would say the last 4 years especially of the Lieu administration of that building, it's kind of in a quiet place. You know, not a lot of big, broad policy things. It sounds to me, if you're looking at this incoming administration, and you're looking at Steve Mnuchin, you're looking at Wilbur Ross, there's a lot of big dynamic things that are going to be happening at the Department of Treasury and Commerce. Tell us what you expect.
Absolutely. And you know, one of the things that I'm going to be watching for in Mnuchin's testimony today is what does he have to say about Fannie Mae and Freddie Mac? The government, these two big mortgage finance companies, the government took them over in 2008 and then did nothing to resolve the future of mortgage finance in the United States. Mnuchin said shortly after he was nominated that he wants to privatize those two institutions. I'm really interested to hear what he has to say about that on the Hill today. There's some interesting dynamics there with his own interests, because he had invested in some John Paulson hedge funds that invested in Fannie Mae and Freddie Mac. He said he's going to divest from those, but he's got a lot of interest personally in what happens to those two institutions.
And Chuck Schumer, by the way, also, I think, had a similar issue come up when it came to his votes on Freddie and Fannie as an investor as well.
When Donald Trump starts working with Congress, they've got to get on top of tax reform, because one reason right out of the gate bogged down with the repeal and replace of Obamacare, and it was dominating the headlines, and headlines matter when it comes to the market. And also stop talking about the dollar and things like that, because don't create uncertainty for the markets. And I'm talking about Trump.
And this is the point I was trying to make earlier, is there hasn't been major tax reform in the United States since 1986. It's very hard to do. Even if Republicans agree they want to get tax rates down, there's trade-offs. And, you know, if they want to do this in a way that doesn't push the deficit much higher, you can't get tax rates down without hurting certain people.
You're talking about special interests pushing back, whether it's the real estate business on the mortgage interest deduction, whether it's just the tax preparers in this country. They don't want the tax code to be less complicated.
And yet, both sides of the aisle agree that tax reform would actually move the needle on economic growth. Like that, we need to see the corporate tax rate come down. But Kevin Kelly, Why has it been so difficult? How come they haven't done it yet? I mean, when I interviewed actually then Treasury Secretary Timothy Geithner, he said, oh, no, we can't do anything in terms of the money overseas because we'd be leaving too much money on the table.
Yeah, I think what everybody really needs to focus on is that the tax code is completely complicated, and it's been to the detriment of the middle class as well as small business owners. So the more complicated it is, the more that the bigger companies benefit, because they can have their cadre of lawyers and lobbyists go to benefit from them, benefit for them. So this administration really needs to focus on making this clean and transparent. We know the Democrats will want to get on board with it. It's just how will they get on board with it? Will it be that infrastructure? Is that going to be the key cog in the wheel to get it through? But Donald Trump needs to look at the people that voted for him, and it's those people in the middle class and small business owners that want it to be clean, transparent, and not hampering them and benefiting the top companies.
But the point here that I think is so important is that, and this is what Dagan was making a moment ago, the town you see behind you is filled with interests who are going to fight for everything that they've got. Retailers don't like some of the plans coming out of oil companies, oil refiners.
Absolutely.
And they're talking about this border adjustment ruining Christmas because of what it could do to import prices. So people are going to fight tooth and nail over this for the next few months. And the big question is whether Trump can get everybody on the same page. Can he actually do the deal?
Can he drain the swamp? Our tax dollars at work.
The swamp isn't going to be drained, but can he get the deal done, I think, is the big question.
He says he's a deal maker.
Can he drive his fan boat through the swamp?
John Hilsenrath, Kevin Kelly, thank you so much. Great insights, as always, gentlemen.